The wealth market in Asia Pacific is projected to grow to $81 trillion by the year 2027. That's according to a report out by McKinsey. It says that one sector that could benefit the most are technology firms that serve the wealth management sector, more commonly known as WealthTechs. The report projects that financial assets of all customer segments in Asia Pacific will rise by 2027. High net worth and affluent clients could see their assets jump the most at 8%, while those with assets under $100,000 or what's considered mass market could see a slower growth of 5%. Financial hubs like Singapore and Hong Kong could also see more offshore inflows. That's about $3.5 trillion worth of money that's expected to come in by 2027, representing a market ripe for the taking. Now, the report says that that's where the wealth tech industry could come in to serve the cross-border market. By doing so, the industry could see their value of investments managed more than triple in the next 4 years, from $600 billion to over $2 trillion. The report says that tech firms that are able to give financial advice or model portfolios could grow the most as they provide more personalized services.
And for more insights, we speak with Mr. Joydeep Sengupta, now he's senior partner at McKinsey Company, and Samuel Rhee, chairman and CIO of Endowus. I hope that I pronounced that correctly. That's right. All right, let's start with you, Mr. Sengupta. Let's pull up this chart from your study. The inflow of funds into Hong Kong and Singapore projected to grow about 8% every year from 2022 all the way to 2027. And you mentioned as well in your report, you call this, we are at an inflection point. How so?
So thank you for that question, and thank you for having me here. I would say that Asia itself is going to be a huge growth engine, driven by the demographic growth right across multiple markets. We look at the personal financial assets actually grow to 81 trillion by 2027. Historically, though, if you'd looked at the penetration of wealth management within that, it had been quite low. And a large chunk of that money had been in banks in the form of deposits and cash. We expect that that will now grow to about 25 to 27% in the next 5 years, which is a significant jump, which is why we call it an inflection point. Why do we believe that to be the case? There are two reasons. One is when we look at developed markets around the world, for example, the United States, typically we found that when mutual funds are at about 18% of GDP, that's the point when the industry really takes off. And we've seen this in other developed markets as well, Australia, Japan, and so on. And as we look at many parts of Asia, we see many countries nearly at that stage. That's the reason we believe that it will really take off.
So we are at a significant stage in the growth of wealth management. Sam, let's bring you in on the conversation here. How do you think Singapore, as a wealth hub, and we are growing as a wealth hub as well, and anticipated to grow further, how can we best navigate this space as it continues to change, particularly when we see the same sort of benefits happening for China, for India as well?
Yes, it's an excellent question. Singapore, I think, is very well placed in this wonderful, long-term trajectory of growth in the wealth industry. What Singapore has going for it is, first of all, a very strong and solid foundation of regulatory environment, stringent regulations that protects customers' assets, strong rule of law. So that's the first thing. The second thing is that there's a lot of infrastructure already through development of the wealth industry over the past several decades. We have many important financial intermediaries. We've developed the family office industry quite well. A lot of asset managers have relocated or strengthened their base here in Singapore. And finally, the location of Singapore is strategically very well located, covering both the South Asian market, Southeast Asia, and potentially North Asian markets as well. So cross-border wealth is another great opportunity for Singapore to tap into. So tremendous opportunities with solid foundations for further growth.
Mr. Sengupta, correct me if I'm wrong, because when I asked you earlier, why are we at an inflection point, you said two trends, and you mentioned one, which is the mutual funds.
Yeah.
And I don't know if you mentioned the second.
No.
Now, you can pick up on that. Now, what trends are we going to be seeing? Because that essentially is what you're saying, the second point, and build on that, future trends.
And the second point is really what I would call the explosion of WealthTechs. And what the explosion of WealthTech means is these technology-driven wealth management firms. And in the last 5 years, there are now close to 100 WealthTechs operating in the Asia-Pacific region. This has grown by about 5x.
What is it?
WealthTechs are tech firms like Endowus, for example, like Moonfair, like Addix, several of these companies which have emerged, which essentially go directly to customers. And really their value proposition, there are three elements to it, as I call it. The first is affordability. It reduces the cost to customers to access wealth management products and services. Second is accessibility. I think it allows a wider range, for example, not just the high net worth, but also the affluent and indeed some part of mass market to access wealth management services, but also a broader range of products, for example, private credit, rare art, etc., which was hitherto only available to wealthy customers. So, and the last point is advice for all. And I think it's really important that as economies grow from a societal perspective, consumers have access. So I think the mushrooming and the explosion in the growth of WealthTechs has enabled this to happen. Although I would say we are in an early stage yet.
Sam, looking at the projected growth in Asia-Pacific chart, I mean, the one that is on the screen right now there, you can see just from the percentages that there's more potential in the affluent and high net worth categories for wealth to grow. Is there a chance that the income gap, that income gap that we're always concerned about widening, does it suggest anything to you about a continued shift there, that it might continue to widen? And what do we do about that? How can we mitigate that?
Yes, I think, first of all, the different segmentation by income is a slightly different thing from segmenting by wealth, because income, by definition, is a flow annual income versus wealth, which is an accumulated stock of savings and financial assets. So wealth is something that is accumulated over a long period of time by individuals, by families, by nations. And so the wealth of the different segments within Asia and Singapore, whether it's high net worth or affluent or mass, is all going to grow. So we're going to see significant growth in wealth across all segments. So income disparities may widen because that's a short-term number. The wealth is the total number, the total pool of assets is all going to grow. And I think that within that space, and as Joydeep highlighted, there is a role to be played by wealth technology, and that's the amalgamation of the two words. Wealth is the business model, so that's wealth management, and technology is the service delivery model, just like Amazon revolutionized the retail technology space, and Netflix, revolutionized the content technology space. Many wealth tech companies are revolutionizing the way wealth is delivered, the way advice is delivered, and the way we can improve access, user experience, and also the cost of access.
Well, thanks both of you, gentlemen, for coming to join us this evening. We're speaking to Mr. Joydeep Sengupta, Senior Partner at McKinsey, behind this report, and Samuel Rhee, Chairman and CIO of Endowus.